Hello everybody, welcome back. Today is Monday, 19th May 2025, and sounds like today bulls are just dominating the market and they have put no area for sellers up to this moment. So let's see what's happened today on Eurusd for the beginning from the morning when the market just opened here on 5 minutes time frame. So after this spike up with two legs, if you see just every candle closing near its high and then creating the channel, which is the next phase, the second phase of the market cycle after the spike. So this is the spike and then the channel, and as you know, every spike just finishes channel finishes in three steps. So this one is the first one, this one is the second touch, and this one is the third touch. It breaks below, enters into the trading range here, which is the next phase of the market. So if I consider this spike, you could just buy, you could just put your first buy under this candle, and look what happened. A lot of buyers went long on this small candle. That's why this candle has been created. It just closes near its eye with just a tiny little shadow. Then it touches the trend channel line, another correction, then rallies up again for the third time to touch the channel, and it breaks the channel. Then it goes up again, comes down, and this is the first leg. The second leg correction, let me just write it down here for more clarification. L1, which is the leg 1, and this one here is the leg 2. So leg 2, yes, okay. And what happens after the second leg correction? In fact, for 80% of time, when the trend line breaks, you should wait for at least two legs correction, down to sideways, which in this case it is sideways a little. So this one is the first leg with an A, B, C correction, and then another correction, and then A, B, C correction. Two legs, and then the market just rallies up again to break above this level. But was it successful to make me go long? No. Why? Because I consider this candle as an exhaustion. Okay, so this is an E gap here. This is an E gap as an exhaustion, and look what happened. A doji, and then an outside bearish candle, and then just market rallies down to the bottom of the channel. This is where you should expect the market to pull back, because after the channel phase, we expect the trading range, which is in work right now. And when it comes to the bottom, you could have bought here if you were in the market. This is another buy signal, and also this one, excuse me, and also this one here with a small double bottom. So bottom of the channel, bottom of the trading range. So these two also are double bottoms, and also a smaller double bottom, a minor double bottom here. So a good, amazing candle bar to go long, and you could just see what happens, and you could expect the market to just touch it here, which is the area of your trading range, and which happens exactly. And every pullback also you can buy in trading ranges. You could buy here, you could buy here, and also you could buy here and wait what happens. And if you just fear of missing out on this long candles, market again gives you opportunity to enter, and you could have even entered here and take your profit right here, which is the top of also day and also top of the trading range of the day, which has been in work for several hours in the beginning of the day. So after the trading range breaks here, then what you should do is to measure from the bottom of the trading range to the top, which always is the case. And whenever market breaks into the direction of the previous cycle, which is the spike on this, and here it normally breaks to the direction of the cycle, which is the case exactly here. So when it breaks, you can just enter. However, I personally would do that. I would just take shorts. For example, if I were in the market, I would consider taking short only if I see a double top here, and also a long or a good short candle with long body like this and nearly no shadows. If it closes below the top of this trading range, I would short it to the downside. But is the case here? Of course not. So I'm not going to take this trade. Instead, I would consider this II pattern, these two candles, as a correction in the direction of the market. So I would just go long on the top of this with buy a stop. So this is what happens, and then I see another correction, and then again here you could even have bought this candle if you were in the market waiting for good opportunity. So this one is also another good opportunity. Both of these just play a role as double bottom even. So when you take these two trades here, you should measure from the top of the trading range to the bottom and drag the line above to see what is the next possible profit target area, which is here. And if you see exactly market has just rallied to this level, it just breaks above it, and when this happens, you should realize that market is even stronger than you expected. And when this happens, I again drag the line from the bottom to the top and drag it above the level to see what is the other possible place for market to hit it. And if you just, guys, take a look at the shorts in the channel today on 19th May 2025. I bought the market just right here on this candle, if I'm not wrong, or on the shadow of this candle. I entered and put my stop below this higher low, and I went long, and exactly it hit my target up here on this horizontal line, green line. And the reason is that on previous week, which is here, this is our previous week, this is the top of our week, and I knew that market somehow, and this line, which is a key area for this week, a lot of traders look into it as profit targets. That's why hardly able you can find any sellers here, and market just rallies up, and it just it just acts as an magnet. So I put my profit target here. And there is another reason that I realized this market is so strong today, is that when market reaches to the first voids of the trading range, and it can't correct itself to touch this level at the top of the trading range, this is a sign of strength, and with no worries I just go long. That's the reason. And again, I can even just go long here again as an example, okay, and put my stop loss here and long the market again. Why? Because on higher time frames, these channels, this tight channel, acts as a spike. If you just take a look at the higher time frames, as an example, 15 time frames, you see this is the spike, this is the channel, so strong, and even in 1 minute time, 1 hour time frame, sorry, you see, it is just in a spike. First, 2, 3, 4 candle closing near its side with small shadows, and if you see these corrections, these tiny corrections on 5 minutes are just a small shadows on 1 hour time frame. So I just look into going long and no selling until I see the trend channel line breaks. Market creates, for example, gap bar with 20 EMA, and then look for the correction and see other signs of strength that sellers are in the market. Then I will consider shorting the market. But as long as this happens, I just stay bullish on the market, and I think this is the best strategy to consider. And something else that I think it worth mentioning here is that, guys, take a look at this here in this just box, this red box. This is a gap, but what type of gap is it? Is it an exhaustion gap right here after this cycle? Is this an exhaustion gap, right? This one? Of course it's not. Why it's not an exhaustion gap? Because when market hits the first target level, doesn't show any weakness. So that's why I consider taking my line here and put my stop and take the other part of the trade. These all are signs that bulls are so strong today. And however, I know that this gap is going to be filled, I don't know, maybe today, maybe tomorrow, maybe during the other days in this week. I don't care, but I know that I have to only take my trades in the direction of the market. And I know you all have heard this several times, that market is your friend. So if market is our friend, this is another cycle that has begun also that makes me to take this trade. This is a spike, and market then enters into the channel phase, which is so strong because there are gaps here, pushing gaps. There is also another gap here, and it just makes me to take the long. That's why easily I just go long here, easy like that. There is no secret in the market, and you don't need any indicator if you just learn how price action works, and if you just find out how to read the price action and each bar correctly, because there is sign. Guys, just look how beautifully market is pushing forward. It is just hitting this, and just like when it just take this high, how it goes line, because there are a lot of stop buy trades here, and now I can just drag my stop loss to this low. I had put it below here, and now that it has taken this high, I'm going to put it here. It is my last lower low place, and this is the profit target that I want to take. And the reason I put it here, because it's enough, and it's just an example for today, that when I say something, I would do the same thing as well. Alright, I think that's enough for today for Eurusd, and we're going to see also what is going to happen in New York session, which in my local time would be here. So I'm going to mark this and write NY, which means New York session. New York session is going to just begin in the afternoon in my local time. So let's see what happens today. I still see it's bullish, but a lot of things can happen and market can enter into the trading range. Who knows? Let's see what happens. Whatever happens, if you read the price action correctly, you can take the trade easily. So let's have also a look into XAUUSD. Gold today started with this candle. I marked it because this is the open of the week, so it started with a gap up, another spike. Let me just a little zoom in. So if you zoom in, you can clearly see this spike with two legs. The first leg of the spike, the second leg. Then after spike, we know the market cycle that it's time to enter when the pullbacks are created, like this one here. This is a pullback, guys, in lower time frames. This is a clear pullback. So I know that market has entered into the channel, which is this one, 1, 2, and 3. And after 3 pushes, touching the trend channel line, we know somehow that for 80% of time we can expect the trend, the channel, to be broken, which is the case here. Just like how strong were sellers here, they just created this nice beautiful bearish bodies with small or very little tiny shadows. Then market goes up again, because here bottom of the channel rose as an support level, and with this one, this candle, you could have taken your long on this because it's a support. We know we have entered into trading range, so bottom, top of the channel, which is the trading range area, it even pushes the market a little higher. Again, this is the top of the channel, but market can't hold and it starts coming down, and it's a good place to take this short for 2 main reasons. First of all, I know that after channel, market has possibly entered into the channel, and second of all, this is an MTR setup, means major trend reversal. What is the major trend reversal? When a trend line is broken, this trend line, I mean, you should always wait till market touches at least the moving average, your 20 EMA, or even creating a gap bar with the moving average. Then just wait patiently until market comes up and lots of buyers will get out. That's why it has created these shadows. And when buyers get out, you should see, you should look into some weakness, the sign of, and this is clearly a sign of weakness. Lots of coverage here, lots of pullbacks, and then market just creates this beautiful, nice bearish candle. You could just put your sell limit, sell stop, sorry, down here. Market is in the trading range, means buy low and sell high. Nice body, so sell it and put your stop loss up here and short the market, take your trades here. So if I were in the market and I had seen this candle, I would have definitely take this trade, and my profit target would be here, which market even ran a little more. So market just saw the next cycle, a spike, channel, finishes after 3 push down, a little overshoot, and then 2 legs correction upside and creates the second leg down. So this whole cycle, this is the first leg, and this one is this second leg. So this is the first push, A, B, C correction, another push down, which is the second leg down. And guys, what the second leg of what? If you're asking, the second leg of this trend. So this is the trend. Okay, it breaks, goes up again, and then market enters, the new cycle begins. So after this long trend, we have a correction, which lots of people who work with Fibonacci levels, they would measure from the bottom to the top of this level, and I think this is the 65% correction for Fibonacci, but I don't work Fibonacci as long as market and price action works perfectly for me. I don't think I'll need any indicators or tools like Fibonacci levels unless you read the market correctly. And this candle just works as an E gap after the second leg finishes, because I see the correction here. This is the bottom of the day, so market touches it really beautifully and it creates a double bottom. So first bottom, second bottom, and good signal bar to take the trend on, and you could have gone long here. This is another cycle, another channel in the bigger trading range. So this cycle is a leg into the trading range. This is another cycle, a spike channel trading range. Okay, top of the trading range, so it touches it again. And because I know this is a big trading range, in the day when I opened the market, I saw it has gone up, comes down, go up again. So I'm going to only buy the pullbacks. That's why when I came into the market and opens my chart, I saw this is the whole scenario in the day. I figured out that today the odds are that we are in a trading range day. That's why I took this trade. You can just watch the short for the trade on this chart today on 5-minute XAUUSD and see what happened. I tried to just tell you how it is working, and I put my stop loss up here, easily took it, and you see then market creates this hammer, or I don't know, the reversed hammer, whatever you want to call it, doesn't matter. It takes it and comes down. This is not the entering of the sellers. This is only bulls who have bought all these lows, and they have taken these profits, bulls just like me. And this doesn't mean that we have entered into the other direction of the market. Maybe some sellers, but I'm not going to do it unless I see market how this place is going to react, because this is the top of the trading range, and also this is the top of the day, so it's a really edge for me. And if I see one of these lows are going to be taken by market, if it does another lower high, I'm going to sell these highs, put my stop losses here or above this this high. And another scenario that I want to mention, if you see I have written possible MTR, there is a reason for this. Let me tell you why. If I zoom out a little bit here, and if you take a look at on Friday, 16th May 2025, when the New York session began, this line is the New York session. Market started just creating a bullish channel. You see, this is in work. It touches first one, second one, third time, fourth time, can't make it. Breaks the channel line, reverses up again, and now this is a possible MTR, major trend reversal. That's why I only look for selling. If market decides to go higher, I don't care. Okay, this is the scenario I'm looking into, and so it is possible that market goes lower and touches maybe this low of the day, and if the market takes this lows, I'm going to for the possible highs, if just reverses up, and I'm going to sell all of them, put my stop loss above these highs and short the market, and I will put my profit targets if I sell it on this level because it's the open of the wick, and also on this level because it's the low of the day, and also the low of the current week, which is today. Okay, everybody, thank you so much for watching this video. Stay tuned, and I'm gonna release another video tonight when the market forms, and when other candles form, and let's see what market happens in New York session. So at the end of the New York session, just wait patiently for another video. I'm going to break down everything happens in the market. Thank you so much. Please don't forget to like and subscribe. Goodbye.